that's the first analysis we have done. Okay, and if you remember, we also did the competitors analysis, and this is the final output of our analysis after collecting a lot of data of the competitors. The first thing I emphasized in the competitors analysis was identifying our competitors first. According to the radar screen analysis, there are the threats from the competitors, not from the direct competitors, but also indirect competitors and also potential competitors as well. So we identified our competitors of our business, A, B as our direct competitors, and C and D company indirect competitors, and E and F as potential competitors. And then we try to collect the recent trends of the each of those competitors. If we have some general trends or some general trends, and we may also mention that as industry dynamics. But in the section of the competitor analysis, we can do a little bit more detailed analysis, gathering the information about each one of the competitors' recent trends. Okay, according to our the example slide of this page, in company A, who is direct competitor of us, they are aggressively conducting big promotion event, okay, targeting new customers, okay, customers in their 20s and 30s. And company B, who is also our direct competitor, they reduced their suggested retail price by 20% to attract price sensitive potential customers. So in the market where the market is so competitive, so attractive, and if the market is growing so fast, and typically the existing players would not compete each other. So the price or discounting the price each other, we can say that's the price war, and then the price war could not happen in the growing markets typically. But if the market is mature, and then if that's a red ocean, and there is a temptation to lead the price decrease, and then eventually everybody will reduce the price, and then the margin of the overall market is very low. So that could be the disaster of all the existing players. So according to our data, and the company A is targeting the customers in their 20s and 30s, and that's why they did a big promotion. Okay, so even though you are a growing company and you are in the growing market, and then you can do some of the big promotions, specifically targeting a certain group of the customers. And in case of the B, they want to expand the customer base and then increase the size of the market by acquiring the price sensitive potential customers to the customer groups of these markets. As I said, this kind of things are happening when the market is not growing fast anymore. So that's why they deliberately do their best by decreasing the price to increase the customer base. Okay, to include the price sensitive customers into their customer groups. Okay, if you see that the current trends of the indirect competitors, company C increased the number of the salespeople significantly in urban areas. Okay, and then in case of the company D, who is also indirect competitor of our company, they introduced new premium products for the customers in their 50s and 60s, and the customers are responding well. They are not as the instant threat to our company compared to our direct competitors, but who knows, the indirect competitors are competing with us in terms of delivering this identical customer values. So the customers may quickly change their mind from us to the indirect competitors. So that's why we also have to watch out and how the competitors are moving. According to our analysis, we have to be very cautious because company C was increasing the number of the salespeople, so they are aggressively increasing their investment in their businesses, especially they are targeting the urban areas. So the competition in the urban areas will be stronger. So when deciding our the strategies, the sales strategies, we have to consider those factors, whether we will fight against company C in the urban areas or whether we can expand our business in the rural areas instead of competing with the competitor company C. Okay, and in case of the number D, they introduced the new premium products for the customers in their 50s and 60s. Okay, we also have to take into this one into consideration in building our marketing strategies. If our core customers are in their 50s and 60s, the movement of company D is could be a big threat to us. So we have to think whether we will fight against the company D in our core customer group of in their 50s and 60s, or we may try to expand our business to the new customer segments, like the customers in their 20s and 30s. Okay. We also have to look at the movements of the potential customers. Potential customers, potential competitors. Potential competitors are not directly or indirectly competing with us, and their values to the customers are quite different from ours, and their products and services are different from ours. But in the near future, they may provide the identical value of our company to the customers, and that's why that they could be a big threat to the to our company. So in case of the potential competitor company E, they recently acquired a competing company in China, and in case of the F, they expanded their production capacity in the existing factory in Europe. So when we think about overseas strategy, and China or the Europe might be the candidates to enter, we also have to take those factors into consideration in building the business strategies. Okay, so we also, those are the summary of the competitor analysis, and we have already covered those contents in the previous classes, and this is the collecting all the data and to draw a final strategy. So that's why that I would like to that's why I explained the contents we covered in the competitors analysis again. Okay. And if you are reminded of the previous classes about the customer analysis, those are the example of the final outcome of the customer analysis. So first thing we have done was identifying who are the customers. Our customers may include the buyer or the final consumer of our products, but also the suppliers of the raw materials to us might be considered as the customer of our company. And when analyzing the needs and wants of the consumers, our loyal customers, as an example, our loyal customers may expect for the quality product, and then the expectation for the quality of the product is low. Okay, yeah. So, but they are very sensitive to the price, so they don't think too much about the quality of the product, but they are very sensitive to the price. In that, if those are the needs and wants of the loyal customers, if we increase the price to those loyal customers, then those price increase may bring negative impact because to high sensitivity to the price of our core customers. But instead of, on the contrary to the loyal customers, our potential customers expect for the quality of the product. And their expectation on that quality is very high, but they are not very sensitive to the price. So if we increase the price of our current product to meet the customer needs, and then the loyal customers may leave our product, but such possibility is quite low to the potential customer of our product. So when thinking about our price strategy, those loyal customer and then potential customers' needs and wants should be considered. Okay. And also in terms of the needs and wants of the suppliers, for the key suppliers, they may prefer steady supply of their newly developed products, not in the peak season. So the reason they want to have a business with us is to have a very steady supply of their business. So in that case, we may offer them to have a steady supply of their products, not in the peak season, but the entire year. And then we may ask some the price discount, because the main purpose of the supply of their product to us is to increase the volumes in all the seasons. Okay. So if we know our customers' price and needs, the needs and wants a little bit more, and then we may incorporate those things in developing our strategies.